Okay, let's talk about the stochastic down here. I've got it set to the 1466 settings. Now, I don't actually think you need indicators, but I know a lot of people like to use them. So you can see the K is set to 14, the D is 6, and the slowing is 6. And this is the Swissy daily chart. Now, in the Small Account Big Profits course, you can learn about this by going to bigprofitscourse.com. Or click the link below this video. We use the open position ratios, okay? And you'll see here on the Swissy that 48% of the traders are selling, and so 52 are buying. So there's a slight edge to the traders who are long. So that's why it says long over there. The majority is long, 52%, and then minority 48%. But this is the definition of a sideways market. And I like to go in when a lot of people, like for example, I'm in a trade on the New Zealand yen right now as I'm recording this, and 79% of the traders are long, so I'm short. So in this chart right here, this is one way that you could use these open position ratios to define a choppy market. And so if you were to use the indicators, again, I don't think you need them because we actually have here other patterns that are just in candlestick based, not based on the indicator. But I know a lot of people like indicators. So this is one way that you could do this. So let's say that you wanted to use the stochastic instead of using the stochastic by itself, which it works really well in a sideways market, as you probably know. But in a trending market, it's terrible. Once the market starts trending, it's all over. it will just kill you. And I know this. I used to trade it back in 2001, if you can believe that. I used to trade the stochastic, and my buddy and I thought it was the greatest thing ever until we realized what was going on. So what this, and that was before there was Forex Tester, or if there was Forex Tester back then. I don't think there was. I didn't know anything about it, so I didn't know how to test strategies. And so this right here, you see how the stochastic is it's crossed up above 80% and it's starting to cross back down. So this is kind of the traditional signal would be on this candle right here. So I'll zoom in so you can see it. It's going to be this candle right here. This would be a sell signal on that one. And maybe you put your stop loss above the recent swing high here. So you've got 80 pips of risk. You wait till it hits, bottoms out down here. And so that means you get out on this candle, I think. So 75 pips, 74 pips, something like that. That would have been worth about 74 pips. Okay, now it actually then moves up, right, on this candle right here, which is a real bummer because the market didn't go anywhere. It kind of moves up right here on this candle. So you go, okay, I'm going to go long here on this candle. The problem is it doesn't go anywhere. So I put my stop loss down here and boom, I get stopped out. And then what happens again? Well, unfortunately, again, it goes back down below, oversold, and then it crosses back up right about here on this candle. Again, I put my stop loss down below this low and I'm stopped out again. So, and I don't know what the numbers were back here. I suspect that the numbers wouldn't have been 50-50. This is back in May as I'm recording this now, so who knows if it would have been trending here. Ideally, when the market's moving really hard in one direction, you're going to see those numbers move away from 50-50. They're going to get closer to 70-30, and usually it's in the opposite direction of the trend. If you want to know why that is, you can watch the other videos here that I posted. But this is a great way to filter out really poor trades if you're using any sort of oscillator like the stochastic. So here's another one right here. I think it's this candle where the market's crossing back over. Actually, no, it's the next one. So it is indeed this one right here. It's this candle here. I'm going to get rid of that red line. It's kind of annoying. And if we were to use that one, you never really got up to oversold. So you would have been in trouble maybe that turns into a loss because it never really gets up there. You could use a pip target. I don't know if I would do that, but some people might want me to do that. So, and this would be you'd probably have to put your stop loss below this candle in this case. And then, do we have any more? Do I hear another one? Nothing until here. And actually, this would be the trade that you'd be in right now if you were still trading the strategy. You'd be in this trade right here, where the market, well, it doesn't actually cross above there or there. It actually crosses on this candle back above 20%. So you'd be long there. And currently, if you got in at the close of that day, 5 p.m. New York time, you'd be up all of 43 pips, knowing that you had about 110 available, but you're up 43 right now. And if your stop loss was down here, you wouldn't have been stopped out on that move down. So you'd be up in that one, and maybe it's going to get up to the 80% and cash you out. But chances are this is just going to bounce around. This is the kind of market that looks really good when you're using stochastic. But if you scroll back, you'll see, like if you haven't looked at this carefully, you'll see when the market's trending, like right here, it's trending up. So look at that. There's a lot of oversold here. It doesn't even get down to a lot of overbought. It doesn't even get down to oversold. And let's see if we can find a downtrend for you. I'll show you the opposite. Here we go. So here's your downtrend right here from about here to say here. And you can see here, look, oversold, oversold, oversold. We do get to overbought a few times, but we also had a kangaroo tail. Like, do you really need overbought? And that's actually earlier than your signal would have been if you used the stochastic. And here we have a moolah top and so forth. So you don't really need to use indicators, but there you have it. If you'd like to learn more about how we're using aggressive risk management algorithm and naked setups to grow a small $1,000 account to 100 grand. That's our goal. In a small account, Big Profits course, you can go to bigprofitscourse.com or just click on the link below this video, and I'll see you in another video. Happy trading.